when the whole world is crashing down with fear, only the best of the best manage to maintain a neutral perspective and take advantage of such an opportunity. If you haven't heard, the stock market has crashed. It has driven extreme fear in the US market, and a lot of people do not know how to take this, what to do, or if they can use this to benefit themselves. So keep watching this video and I'll break down some of the best ways to approach such an event, be able to benefit from it, learn a lot from it, and utilize it to the max. So let's be quick about this and let's start. First thing I would recommend is keep an eye on a fear and greed index. Usually they're just like a simple foundational tool to have a general idea of the emotions within the market. The one I'm displaying here is from CNN. And as you can tell, currently we are experiencing extreme fear. I'll get onto why this is important in a bit and what you should be doing in this moment. The next thing I would suggest is keeping an eye on news and using a site like, for example, Financial Juice, which is amazing to keep an eye on macroeconomic indicators, news that may come out, oil prices, currency news, and any other sort of news. Financial Juice is personally my favorite, but you can use any other sort of financial or economical news source. The reason why you want to do this during crashes like this is to keep yourself plugged in, to be constantly aware of what's going on in the world. And if you are invested or deep into an asset, you can make decisions quicker than most. The other thing that I would suggest personally is to keep an eye on things like Bitcoin, things like the DXY, the US 10-year or the US 30-year, and keep an eye on volatility. A lot of people won't understand what I'm about to say, and to explain it is something to do on another video. Most of you guys have already watched the previous ones and you understand what I'm about to say. But basically, in trading and general investments, there's a rule of thumb, which is not literally told or written anywhere, but people just know, it's common sense. In order for a move to happen in a certain direction, you need enough liquidity to be able to provide for those positions and players that are trying to move the market that direction. Now, yes, I do believe that there are algorithmic factors into a market movement, but for the sake of simplicity for the new viewers, what I want to teach you is during these moments where a market crashes a lot, whilst everyone is experiencing fear, selling, and removing any participation in the market, for example, if they're holding stock, if they're holding Bitcoin, if they've bought into an asset and now it has depreciated, this is when you look to buy. This is when you look to participate. When everything goes down and the market prices are cheap, you need to think of it as when you go to a store, when you go to an actual market in real life, because you've got to understand that these markets are not centralized, which means they are not in like a headquarter. Yes, there are trading headquarters that trade and exchange these assets, but there isn't a physical transaction being done. But it is the same as a physical transaction being done in real life. Think of this. If you go to a store and your favorite sneakers, or your favorite shoes, your favorite sunglasses, your dream car, they've all just dropped in price. If those things dropped in price, would you not be more intrigued or interested in participating in purchasing them, or just generally being interested in such a thing? You would. If things are cheap in the market, you'd be looking to buy them, because in comparison to other times, previous times before this, they were not this cheap. Now, why is this not the same reaction to most people when it happens in a financial market? It's because human nature is complicated, but one thing that most big players know is that when human beings see a lot of red on their screen, or when they lose a lot of money consecutively, they panic. They experience fear, they experience panic, and they lose interest in participating, buying, adding on top of positions, and so on. So let me ask you this question. If everyone is panicking, feeling fearful, selling, and the prices are driving lower and lower, what better time would there be to buy? To use that liquidity that people are providing from selling, shorting, and just generally panicking in markets? What better time would there be for you to join in and actually buy? What I'm trying to say is, if this is a high price and this is a low price, and price has been trading within this range over here, we've been to the high end, we've been in the middle, we've been to the high end again, and let's say that within this area right here of price action, that is where the most profits would come if you were to buy. And this is just a simple example. Where would the best part be for you to buy in order for you to make money from that buy position? It would obviously have to be here. So now, if the markets have done this and you are here, why would you be panicking? why would you be selling? As the book Intelligent Investor says, in one of my favorite quotes in there, it states, when prices drop, why would you panic? This is where the assets have just gone back on sale. You are now available to purchase the assets. They're back on sale. Up here, they are not on sale. They're currently under so much volatility to push the price up higher that you would be essentially trying to catch a falling knife, but on the upside. And the hard part of being able to participate in these things is obviously knowing when to enter. And I get that. That is one of the main concerns that people that don't do this have. Let's take Bitcoin for example. This is a simple practice that I've explained in a lot of my videos previously, and it's something that I'll keep talking about till the day that I die. If you use the concept of fair value gaps, and this is the weekly chart, you will see that for a weekly fair value gap, there will be a lot of reactions coming away from it on the chart. This gap that I picked right here had 1 interaction, 2 interactions. This is a week, so that's a 3rd interaction, and a 4th interaction, which is now. This is not simple support and resistance. It's not a simple we get there and then we press buy type of method. But what I'm showing you is a simple approach to keep in mind next time that you may experience such a move in the market, or if you wonder how you could participate in the market. Now, I won't get into detail about this, and I obviously can, and I have in my previous videos, but you can do this to keep an eye on, for example, if the market started to push down lower last week, which was this week right here, and Monday we opened again, although Bitcoin runs during the weekends as well. If there is a gap on the way, price action wise right here, for reasons that some of you may understand and some of you may not, which I won't explain today, the market will experience a reaction from it. This area right here is a very lucrative area to be able to take advantage of. So that's another thing to keep an eye when crashes like this happen, the high time frames, fair value gaps. And the last thing I would suggest you keep an eye on is an economic calendar. You can do this on Financial Juice, but my personal opinion is that Forex Factory is one of the best. Today, the date is 5th of August, 2024, and although these have already happened, which I will show you in a minute, you want to keep an eye on these things coming out. I would argue that these figures are not as important, but the reason why I want to keep an eye on these, as I said, many of you already know this, is because there is a lot of volatility being pushed into the market during these times. Now, if you change the time here to London or EST, you want to make sure it's matched on your TradingView chart or any other chart that you use. And for example, this is EST, so it's New York time. And at 10 a.m., we had ISM Services PMI. And if you go to a dollar-related pair like Euro USD, this is EST right here. If we go to 10 a.m., you will see that there was quite a big move, this time not as sustained as it usually can be. This could also be because of the volatility that the market is experiencing at the moment. But regardless, just keep in mind on things like that. And for the people that watch my videos and understand the concepts that I use, the last few ADRs that we've had on the market were around 47, 42. And the most recent ADR, which was for today, it was predicted to be 71. This is an automatic calculator that I've got for calculating the ADR. And it showed me 71, which is very accurate. And as you can tell, London moved 82 pips, which surpassed it. And New York moved 65. This is not normal at all, guys. If you check the typical ADR or the typical movement intraday for EURUSD is around 20, 30. In total overall, the day will be like 40 or 50. And today it was 82 and 65 for London Killzone and New York Killzone. So this is why you want to keep an eye on things like gaps. Speaking of gaps, for example, if you go to the 4 hour in this case, you guys have already watched my videos on my 159 theory, candle number 1, 1 a.m., candle number 5, 5 a.m., and candle number 9, the reversal candle, contrasting the previous candle before it. Once again, has this tapped into a gap? Let's have a look on the left. Shocking news, isn't it? Now, if you use these correctly, you can participate in markets. If you don't use them correctly and you participate in fear or panic, you will simply be blurred and you won't understand what's actually going on with price. But anyways, this was a general topic being covered. It's just some simple advice to give to people that are starting to get into this and how to not waste time and utilize this event to the max. If you're trying to participate in a market or an asset of which is currently bearish, I would highly advise that you use high time frame fair value gaps, such as Bitcoin weekly gaps, which I have tweeted about many times. You can see many long positions being offered inside of this area, and this is the 4th time that becomes an offer. I personally believe you can use, I'm currently attempting to use, but obviously I'm not over leveraging, I'm not over risking, so whatever happens, I'm not connected to the outcome. But yeah, for people that are trying to learn, when you're learning during events like this, it will teach you a lot. Keep Keep an eye on the fear and greed index. Keep an eye on the prices of things like the Dow Jones, S&P, and the Nasdaq. Keep an eye on any news coming out from sources like Yahoo Finance, Financial Juice, Forex Factory. Read these things and see, for example, I don't know, if the news comes out that Vladimir Putin decides to do something terrible, then that could cause price fluctuation. Keep an eye on the news every single day coming out and the time of it. Make sure you align this time and the time zone of Forex Factory with your chart. And of course, most importantly, utilize one of the best price action, I guess you could call it, patterns, which is the fair value gap or the gap itself. By marking them out, and when there is a lot of volatility being pushed inside of a market, injected into an asset, see what is ahead of price, prior to price, and inside of price right now. For example, if you just got the news that the stock market had crashed and you were inside of this candle, then you would anticipate to potentially seek out shorts inside of this week for Bitcoin. And clearly that wasn't the dumbest idea. There wasn't a clear move away from it here, but the next gap above it, there was. You can see there was rejection, a move back down, and then the next week did the exact same thing, moved all the way down to what? Another gap, which we are currently in, which I personally am interested inside of. So keep all of the things that I said in mind, do your own research, and seriously start to learn these things, because it will benefit you in the long run. The world is changing every single week, perhaps every single day, and things like this will fluctuate prices, asset volatility, and to be even more specific, a lot of regulations in the world. So yeah, keep an eye and keep a note of all the things I've mentioned here, and perhaps dig even further in the rabbit hole of trading, investing, politics, finance, etc. You will thank yourself in the future. Take care.